Good afternoon, everyone. We are the Group 5, and our topic is all about notes to financial statement. But before we are going to discuss these notes to financial statement, let me first introduce my co-reporters for today. Yours truly, Trillanes Jelly Rose B, Ortiz Edison M, Abisado Elmar P, Acosta Patricia, and Jumrani Alimar.
Notes to the financial statements contain detailed information on the accounting decisions by accountants during the creation of the financial statements, as well as explanation of important factors that impact line items. So ibig sabihin, nagpapahayag ng panlapi na naglalaman ng detalyadong impormasyon or decision sa accounting. Financial statement notes are used to provide shareholders and other interested parties with detailed information about the accounting decisions and extra news factors that impact the financial positioning of organizations. So it means ang mga tala ng financial statement ay ginagamit upang mabigyan ng mga stakeholders at iba pang interesadong partido na detalyeng impormasyon tungkol sa desisyon ng at extra news na nag-aapekto sa financial na nagpo-posisyon ng isang organisasyon. Provide a narrative or desegregations of items presented in the FS and also shows items that do not qualifying for recognition. So, ibig sabihin, nagbibigay ng salaysay o desegregation ng mga item na ipinakita sa financial statement at nagpapakita rin ng item na hindi kwalipikado para sa pagkilala. Report informations that does not fit into the body of the statements in the order to enhance the understanding of the financial statements. So it means na nag-uulat ng impormasyon na hindi akma sa katawan ng mga pahayag upang mapahusay ang mga unawa sa financial statements. Financial statement are documents that publicly traded companies use to communicate financial data to a governing body called the Securities and Exchange Commission. It means nagpapahayag sa panlapi ng mga dokumento na ginamit ng kumpanya na ipinagpalit sa publiko upang maiparating ang data. Financial statements contain information about assets owned by a company, debt owed by a company, revenue, expenses, and information about financing provided by shareholders. The financial statements contain line items that express of numeral value on each item listed. So, ibig sabihin, naglalaman ng impormasyon tungkol sa mga assets na pag-aari ng kumpanya, utang na inutang ng kumpanya, kita, gastos at impormasyon o yung mga financing na binibigay ng shareholders.
Notes to financial statement. Footnotes. Notes to the financial statements disclose the details assumptions by made accountants when preparing a company's income statements, balance sheet, statement of changes of financial position, or statement of retained earnings. The notes are essential to fully understanding these documents. Significance of notes to financial statement. Notes, also known as footnotes, are important in accounting because they provide additional information regarding methodology, evaluation, time period, and MyRand. Other calculations, nuances, financial statements, and reports provide a uniform framework for evaluating sales, net income, cash flow, asset, liabilities, and stockholder equity. There are many different ways this account can be interpreted and value both on the business and industry. Notes provide an explanation for how the numbers in financial statement or report are calculated.
Good day, ma'am. My name is Alimar Aziz Jumrani, and I am the next reporter. Today, I'm going to discuss the purpose of notes to financial statement. The purpose of notes to financial statements is to provide the necessary disclosures required by Philippine Financial Reporting Standards or PFRS. Specifically, PAS 1, paragraph 112 provides that the notes to financial statements shall and present information about the basis of preparation of the financial statement and the specific accounting policies used. Usually, the first notes in the series explain the basis for accounting if cash or accrual rules were used to prepare the documents. And B. Disclose the information required by Philippine Financial Reporting Standards that is not presented in the financial statements. And the second is disclose the information regarding the Philippine Financial Reporting Standard is not presented in the statements. And C. Provide additional information which is not presented in the financial statement but is relevant to an understanding of the financial statement. So it means you need to provide an additional information that is not presented in the financial statement but it relevant to understand the financial statements. And the next is parts of notes to financial statements. Basis of presentation. These notes outline the legal basis on which the financial statements are prepared. And the second is accounting policies. These notes explain the accounting principles and methods used to measure and report the financial data.
Good afternoon, and now I will be going to discuss the parts of notes to financial statement. So first, we have here the basis of presentation. These notes outline the legal basis on which the financial statements are prepared. So in this basis of presentation, it means that they do an outline or they organize its legal basis or they do it in a legal way on how to present or prepare the financial statement. And next one, we have the accounting policies. These notes explain the accounting principles and methods used to measure and report the financial data. So accounting policies are very important because they set out the rules by which companies reports its financial information. Also, these accounting policies it explain the accounting principles or the procedure that the business has chosen to create a financial statement and for it to provide a clear overall view of the business finances. And typically, they are presented to the company's outside parties such as the shareholders, investors, financial institutions, and others. Next one, we have depreciation of assets. These notes show how the assets are depreciated over time and the methods used to calculate depreciation. So in this depreciation of assets, it shows the loss in assets value brought on by an asset's ongoing degradation over the course of its useful life. So this depreciation is calculated by businesses to determine on how much their assets have lost in value over time. Next one, we have the valuation of inventory. These notes indicate how the inventory is valued and the cost formulas used to determine the cost of goods sold. So this valuation of inventory, it is a method of an accounting that businesses use to determine the worth of unsold inventory stock when generating financial statements. So an organization's inventory stock is an asset. And in order to be included in balance sheet, it must have a monetary worth. You can use this statistic to calculate your inventory turnover ratio, which will enable you to better plan your purchase action. And the last part of notes to financial statement is the subsequent events. These notes disclose any significant events that occurred after the end of the reporting period that may affect the financial statements. So these subsequent events, it occur after a company year's end period but before the release of the financial statements. So the financial condition of a business may be greatly impacted by such events. So they must be taken into an account when creating a financial statement.
Now, let's discuss the method of preparations of notes to financial statement. As we all know, the method of preparations of notes to financial statement is a crucial aspect of accounting that ensures transparency and clarity in presenting the financial position and performance of an organization. These notes serve as an additional information to the main financial statements, providing further details, explanations, and disclosures. In preparing notes to financial statements, organizations must follow a systematic approach. Firstly, they need to identify the key areas that require additional explanations or clarifications. So these include significant accounting policies used, contingent liabilities or commitments, related party transactions or any other materials informations that may impact users' understanding of the financial statement. So in these methods, this includes methods used for valuations of assets and liabilities, revenue recognitions, depreciations policies, etc. So these policies are clearly stated in the notes to provide the users with a better understanding of how the financial statement were prepared. Once identified, organizations should gather relevant data and analyze it thoroughly before drafting the notes. So the language used should be clear and concise while ensuring compliance with accounting standards and regulations. It is essential to strike a balance between providing sufficient information without overwhelming readers with excessive details. This includes any significant judgments or estimates by the managements are disclosed in the notes. For example, if there is uncertainty regarding the future events that may impact the company financial positions or performance, it must be disclosed in order to provide users with a complete picture. Now, let's go to the order of presenting the notes. The order of presenting the notes to financial statements is a crucial aspect of financial reporting. So, it ensures that all relevant information is disclosed in a systematic and organized manner, enabling users of financial statements to understand the underlying transactions and events. So we have here the compliance with PFRS. So what is PFRS? So these PFRS are the Philippines Financial Reporting Standards or the Financial Accounting Standard. So this is the new set of generally accepted accounting principles issued by the Accounting Standards Councils to govern the preparations of financial statements. So we have here the first one, paragraph 16, provide that an entity whose financial statement comply with PFRS shall make an explicit and unreserved statement of such compliance in the notes. Next, we have accounting fallacies. So these are several accounting fallacies that is used in the preparations of your financial statements. So accounting fallacies, these are the specific principles, methods, practices, rules, bases, and conventions adopted by the entity in preparing and presenting the financial statement. So in this order of presenting the notes, the accounting policies, so examples, whether the entity use historical costs, current costs, or whatever the measurement basis that is used in Preparation of your financial statement, that is accounting for the inventories, whether the entity use the way average methods, first in first out or last in first out, that will be your properly disclosed in under accounting policy. This includes the details about measurement bases, recognitions criteria, or any specific accounting treatments that applied. So by outlining these policies upfront, users can better interpret the subsequent financial information. I guess that's would be our report for this afternoon. Thank you for listening and God bless everyone.